Hey everybody, Boris from Forex. Welcome to the weekly technicals for the majors for euro dollar, dollar yen, pound dollar for April 8, April 12, 2019. Euro on the brink. That's really the story as we look forward to the week because there's not much on the economic calendar except the ECB meeting, and that could be very crucial because technically euro is at absolutely critical juncture here. It's testing its multi-month low support, and depending on how the ECB goes, we may have a break to the downside, which could open up a run all the way down to the 110. The levels in most of the pairs have pretty much stayed the same. It's been a very, very tight range. We've broached at 1200, but really didn't break the lows at 1185. So support still stays around 1150 as the key support area in the euro. Resistance at 1300. 1400 is the big range resistance, but really it's just been traveling less than 100 pips a whole week long. Dollar yen is having a very, very hard time at the 112 level, despite the fact that US data was actually relatively okay. Although I think the problem is that the market may have initially thought it's relatively okay, but I think the more the market rethinks this, it's not as good as it appeared, primarily because wages were much lower than expected. Basically, it really appears like there is just zero chance US rates are going to rise anytime soon. That keeps a cap on dollar yen, very much so. And if we get any kind of risk-off flows, we could go right back down. So I think as technicals are, although technicals are continuously, slowly, steady pointing up, we'll take a look at the charts here. I think there's just a lot of concern about the upside here. I'm not a bull of dollar yen here, although technicals are still to the upside. And cable is, of course, its own Brexit story. 28 still remains the key support, 33 to the upside. And nobody really knows what's going to happen this week, so we're just going to let the market let that play itself out. As far as the data goes, as I said, really the only key focus this week as far as macro data is going to be the ECB presser, which is actually on Wednesday, not on Thursday, ironically enough. Friday, front of the week here, just German data. We have UK economic data, which is very likely, although we're bullish, UK economic data based upon the pop in manufacturing PMI. None of this, I think, is really going to matter. And most importantly, I think the manufacturing data could be offset by the GDP numbers, which could be worse than expected because the PMI services really collapsed. None of this, in a grander scheme of things, of course, matters because all eyes are going to be on Brexit. But I think if you get more negative UK data, it will really foreshadow the problems of a hard Brexit and could put further pressure to the downside. Over the last week, I'll show you technically, the market has become a lot less confident in this benign Brexit, some sort of a delay or some sort of a compromise deal because of the frustration and the clear inaptitude of the UK Parliament. So I think the technicals are starting to really roll over here. We need to be very careful. Also, in addition to the ECB stuff, we get inflation data out of the US. Here we are bullish dollar yen because oil and gas prices are on the rise, although I don't know if inflation itself is going to food and energy is going to show anything marginal. We're at 210 basically right now, and I doubt that we're going to have any kind of price pressure. We certainly don't have any wage pressures, so it'll be interesting to see if we have price pressures to the upside. And that's pretty much it. I don't think we have anything else. On Friday, we have U of Michigan sentiment, which also I think will be interesting here. Here, Kathy is also bullish because we've had strong equity performance and everything else, but, and I wonder, the weak wage growth and the kind of a shadow decline in job demand, I wonder if that's going to start to reflect itself in Michigan sentiment. This is actually going to be a key sell. I think if this thing kind of goes down, surprise to the market side, that is bad news for dollar yen, and we should be wary of that. Watch that very carefully. But that's pretty much it. It's, as I said, pretty much the euro story as we start the week. So let's take a look at the euro here technically, and this is the key thing that you see. So of course the double bottom, we tested it a couple of months ago at very, very strong levels here. We tested it this week, came back up, but this is the critical thing here. Euro in a very, very tight range, closed pretty much at the lows of the day, and certainly the bears are smelling victory here. They really want to press this. They know that if they can break this 1175 lows, they can really push us to 1150, and they, very, very soon they could really have the 110 in their sight. This is really contingent a lot, of course, on how dovish the ECB is going to be, whether they're going to put further downward pressures on German yields. Look at the German yields. They're barely above zero, and if they go negative, that's the correlation between euro and German yields has been the strongest of all the various factors. So if ECB is super, super dovish and comes in there and says we're going to do a secondary QE, German yields go negative. That, of course, puts euro right back towards the 110 level as we go forward. On top of everything else, by the way, don't forget that now that there seems to be some mild agreement with China, the next big target of the Trump administration is Europe, and Europe is really vulnerable to, it's reeling right now from the fact that there's just been a general collapse of industrial demand across the world. And more importantly, and this is really critical, I think there's just a secular collapse of automobile industry. That in America, for example, 50% of young people don't drive anymore. So there's just literally no demand for cars as a fundamental aspect of capitalist life. That's terrible for Europe, which is so heavily skewed towards the car front as far as the industrial production. So I think it's important to keep an eye on this. The overall trends in Europe are not positive, and they may be kind of in a secular vice here. So the negative trends in the euro here could really accelerate to the downside as if the technicals break below the 1150. I'll be watching that very carefully this week as a key level and a key story as far as the charts go. So here's a story with cable that I was talking about, the fact the market is losing its patience and kind of really changing its tune here. You remember every time we would have a big pop, they would buy the dips. So they bought the dips last time, but now it's been we basically closed out the week in a very blasé manner. This whole right here, 2950 support level is the first level of support. The next level, the very key level, is 28. That opens up 125 as a potential move. That's basically the Brexit as a collapse scenario. It's still not out of the realm of possibility that they will miss the deadline, or the Europeans won't let them extend, and that there'll be some sort of a crazy spin out here that nobody really anticipates. And more importantly, the long-term impact of this is going to be really unknown until several months forward in terms of just how harsh it's going to be for the British economy. So my point is that technicals right now are really starting to roll over, and in some ways, if you're punting, it may be actually a good idea to go short with a stop right around here, like around the one. I mean, you have to give yourself a lot of space here because obviously it's a very high volatility trade. But so you trade small with a 133.50 stop as your stop here. The true stop probably is running higher, but at this point, if it gets to 133.50, I think the change of sentiment towards a real soft Brexit really takes place. But for right now, if you're following the disappointment of prices, you're kind of feeling that maybe that there is a collapse scenario. And if the collapse scenario does come and you're in this position, it really opens up the way towards the 125. So it's not a bad positioning trade here, even though there's just very little visibility one way or the other. So dollar yen, as I was saying, yes, it definitely broke out. We had a nice continuation move from the 1100s towards the 1200s, but we're kind of dying out here. And more importantly, if we can't close Monday or Tuesday above 1200, if we can't hold those highs, I think the probability of us coming right back down increases, because it essentially says that the risk-on rally that we've had, the S&P, the Dow, both having very, very strong moves, could be petering out. And if you get risk-off flows, that's the only thing that's been propping up dollar yen is the risk-on flows. So if you get risk-off flows, the potential here for a correction is pretty strong. Now, at the same time, 110 is certainly very, very decent support here, but it's going to be a third failure at the 112 if we can't cover above it. And I think that could be a likely scenario as we go forward. So I'll be watching that very carefully as we start. And then we'll get to the COM dollars right now.